Favorite index fund is FTIHX. This is a total international fund that tracks the all country world index, excluding the US. So essentially it invests in every non-US stock. That includes developed markets like Europe and Japan, and also emerging markets like Brazil and India. So international stocks are often correlated with the US. When ours go down, usually theirs do too, though sometimes they move independently. Generally, international stocks are more volatile, and in recent years, US stocks have performed much better, but throughout history, there have been some periods where international stocks outperform the US.
So if we look at this fund's holdings, it has 5,060 companies in total, with the top 10 making up about 10% of the fund. So these 10 are going to be the 10 biggest companies outside the US. Probably the most well-known of these in America would be Nestle and Samsung. Toyota is also going to be right outside of this list as well. For the sector breakdown, you can see financials are a bit more concentrated than the rest, but not by too much. Overall, very spread out by sector. For the region breakdown, we see Europe is 40% of the entire fund, and then emerging markets as a whole is second. Now, both China and India are both considered emerging markets, so they make up a lot of this section. Here's the country breakdown. Japan is the most by far, and like I said, we have China and India right here making up a good portion, but overall pretty spread out. We have a list of about 20 here, and 9% are still throughout some other countries. Another thing that's unique about a fund like this is that you get an extra layer of diversification beyond just the stocks. Your currencies are diversified too. This can add growth potential because if some foreign currencies strengthen against the US dollar, your returns increase even if the underlying stock prices stay the same. Of course, it can work the other way too, but the fund is naturally weighted towards countries with the most successful businesses and the most global influence, which helps mitigate that risk. For the expense ratio, it's at 0.06, which is the highest fee out of the ones I invest in, but still very minimal at only 60 cents for every 1,000. For the performance, again, I use some different funds to line up the comparison as close as possible, but overall, you can see the US has overwhelmingly outperformed the international the past 15 years. With really the only situation where international did better was in the most recent bear market, where it went down about 4% less than the S&P. So up until recently, I never really wanted to invest anything into international stocks. I figured in recent history they have been significantly underperforming, and I'm not as familiar with how businesses operate internationally as I am in the US. But when I look back at longer stretches of market history, there were entire decades where international stocks actually outperformed the US market. And on top of that, you get the potential benefit of currency upside. To me, it also seems wise to have some country diversification, because if God forbid the US faced a major disruption like a cyber attack or conflict that hit us harder than the rest of the world, I'd want at least a part of my portfolio tied to the global market that may be less affected. So for my retirement account, I do about 10% into FTIHX, and for the taxable accounts, I do about 20%.